Microsoft, Amazon, Apple. And if you think about it, these are all the companies that led us through this 9 to 10 year long bull market. But these are also the companies that really led us into correction. So we want to see that these companies are able to post some pretty decent earnings reports, provide us with some good guidance so that the market can really resume its rally. I mean, you're looking at the three major catalysts that could propel this market as being earnings first and foremost. The Fed, we want to make sure that the Fed remains dovish, and we'd like to see some progress on a trade resolution with China. I don't know that we're close on that one, but we would like to see progress on that. But the number one most important thing are the earnings from those big companies I just mentioned.
Yeah, and we've got some trade talks planned for this Wednesday, I believe, with the Vice Premier of China coming over and hopefully engaging in some substantive conversations. If earnings are not great, if guidance isn't great, but there's optimism on trade, would that balance out?
It will, because what you've seen happen is if you look back to January of last year, the forward multiple on the S&P was like 18. And then as we came in limping into January 1st of this year, that multiple had gone all the way down to 14. So I think 18 was too high, 14's too low. The right number on the multiple is probably about 16. So if we start to see some progress on trade, if the Fed leads us to believe that they're willing to be more dovish, you're going to see that multiple begin to expand back towards that 16 level. So I do think the market could rally if we get some good progress there.
You still a Tesla bear?
Yes, I can't stand it.
You can't stand it? How do you really feel?
So I love the product. So I just want to go on the record as saying I do love the product. I think it's a great product. But as far as the company's concerned, they've got their issues. Right now, my biggest issue with them is their growth story. They had to finagle their numbers last quarter by recruiting unpaid volunteers to deliver their cars. Now they're firing 7% of their staff. And I've actually heard analysts trying to spin that as a positive. But, I mean, let's really try and figure out, is everyone going to work for Tesla for free? No, that's not going to happen. So their product, quite frankly, is too expensive. They're halting production of some of their vehicles. You've got Volkswagen coming out with a Model 3 competitor next year that's half the price. So now Tesla has to begin to compete on price, and they've got $1 billion of debt coming due. So I think the challenges for Tesla are significant.
And that's why you're bringing us a stock pick today, which is really interesting. It is O'Reilly. We know the commercials, the auto parts company, right? But why do you think that this is a good play in the not anti-electrification of cars, but you think it's just going to be a lot slower than we think?
I do. I mean, right now, the electric vehicles might be at 2% of total vehicles. I think when you look at the valuation of O'Reilly, it's really pricing in 10% electric vehicles. And it's just not going to happen. I think it's overdone. Tesla's recent moves validate that. So, O'Reilly's valuation's been under pressure. And if we're in the 8th inning of this bull market, auto production and sales slow. And that's what we're hearing. As sales slow, more people are going to opt to fix their cars. And this is really a great slow economy stock. From July of 07 to July of 09, the S&P was down 38%. O'Reilly was up 4%. So it really is an all-weather stock. And I also think the Amazon effect doesn't apply to all brick and mortar retailers. So there are some opportunities there. I think auto parts stores are more insulated from Amazon. I don't think people are going to buy all the parts to fix their cars from Amazon, which gives you a good opportunity to get into O'Reilly at a good valuation.
I like it.